Good morning, traders. Welcome to the TMT Stock Market Strategy video for Tuesday, July 26. All right, well, we did get a market pullback, but very, very quiet pullback. So, again, I don't see there's any conviction to the downside. I'm looking for clues and some evidence. I showed you on yesterday's chart. We are getting some deterioration on our indicators. My trading model is now neutral, so basically reset itself, and we're looking for some clues. And we continually manage to stay at the upper end of the range in the S&P, the IWM, which the Russell 2000, and it's quite bullish, believe it or not. It is bullish, but there are signs of extreme complacency on the VIX. There are signs of rolling over in many of the indicators that I follow. I don't put it out all of them in the same video; it'll be too long. But I want to show you the NYUD. You've seen this before. New York Stock Exchange Advanced Decline with Volume, and you could see here that we are up here hanging above this range, and all of a sudden our indicators are dipping back down below zero. Once we get there, we're not there yet, but we start to break zero and we start to hang around here. That's going to give you some clues that that the momentum is waning. And when you see these small little tiny candles continually moving up, that also means that momentum is waning. Now there are a couple of signals, sell signals that we do have. Okay, but we use many to get our confirmation. Here's the stocks above the 50-day. I showed that to you as well. And these are areas where markets sell off. Okay, where you put in a short-term local top. And right now the markets are overextended. They have been, but they are sideways. Consolidation is actually very good to unwind the overbought reading. So you have to be careful looking to short the market unless you have a longer term time frame and you're willing to add as the market goes higher. But here is another culprit that I like to look at, and obviously, guys, it's the VIX, right? What do we have here? Well, we have a real nice, now we have a higher high and higher low. We have a positive divergence now that officially formed in our stochastics and CCI. Still waiting for that crossover in the MACD, and we do have momentum going to the upside in RSI. So 3 out of the 4 is not bad, and we're sitting on major support. Okay, we have FOMC meeting, 2-day meeting happens this week, and we have a lot of earnings coming out. Tesla, Facebook, Amgen that's coming out, Gilead. So there's a lot of big key numbers that are coming out this week. Is going to move the markets one way or the other, and that will trump the charts. So I'm not sure if you're looking to get in front of a freight train. I know I'm not. So just be careful out here, okay? VIX, VXX, one of our trading systems trading programs that we've put together with beta testing. We've been using this system for the last several years. We finally put it out to the public for our subscribers. And you'll see this. I'll show you some samples once we go live with it. But the VXX, right now, guys, it's still not on a buy signal. Okay, yes, energy is building, and we're going to need to see more basing and consolidation or one big flush to the downside. We can get a big flush and a big spike in volume, and then the next day we take out that previous candle's high. That would give me a buy signal in the VIX, a sell signal in the markets. Let's take a look at the UUP, which the dollar ETF doing very, very well, which would put pressure on commodities, the commodity sector itself, gold, crude oil, copper, grains, and eventually, if this thing starts to really break out, it will hinder on the multi-conglomerates too as well. So eventually down the road, it will hurt stocks. So we need to keep an eye on the UUP, okay? GLD, just wanted to show you that we did come down. We met this one little target area, and now it's going to be the most important is that gap fill, okay? We did have, let me, I'm using a different layout. Let me just, I just want to show you where we are here. And if you remember, I said that a lot of this, when you see price hold true to the retracement, it's actually it's going to hold pretty well. And you could see here that 38% retracement holds very well, and there's that 61.8 just on top of that gap. So that's a great To me, that's really reliable Fibonacci retracements when you get the price lining up to the ratio. All right, so this is what I'm looking for in a GLD. I'm looking for that gap fill anywhere in here, that 61.8, even to 50, to fill this area, and then look to reevaluate possibly going long GLD. I think gold is in a second stage bull market, and I think it's got a lot of room to run. Not until it starts to roll back down again. GDX. We're looking at a 26 print here. That'll coincide nicely with this long-term uptrend line from January. That also reflects the 23.8% retracement on the Fibonacci retracement. So 26 will be the first one. Then we would look to wait to consolidate, and then if that's the case, it'll be 38.2, which is $23.72. Okay, that's GDX. So I'm watching these two indexes closely. All right, the ETFs, excuse me. Spiders. Okay, well, we have, you can see momentum starting to wane, starting to roll over, which is fine. We have very low volume on this push up, but we're still in this consolidation mode. And I showed you where the chart was just price. Today I'm showing you where all of the zones are. And you can see here, we just consolidated the last 8, 9 trading days. It's been very, very boring. And let me get that. There you go. So we need to break below this, below 215, or break off to the highs for another run to make new highs again. So that's the bottom line with the spiders. 60-minute, you can see that I mentioned about. We had our unwinding of our negative divergence, and that's forming right now with lower lows and lower highs. You can see here. So maybe we get a break. I mean, there's nothing wrong with the markets rolling over and retracing 38, 50% of that move. It builds more energy for another market move higher. But this is just insane, the way the market moved from the Brexit lows. Then it moves up again, as you can see here, and we've been sideways. I mean, this is just very boring. It is to be expected. We are in summer doldrums, so keep your palates dry. Believe me, there'll be some volatility this summer. I do believe August is going to provide some great summer trading. Diamond, same thing. You can see repetitive patterns. We're in a range here. Nothing really to talk about. It's going to need to get below 184 or the high of 186. Okay, transports. Here's the other canary in the coal mine I keep mentioning. Lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. Yes, we did take out this previous swing high, but look what's happened. We're back down below again. So the transports, you're not going to get any significant rally with not participation. Excuse me, participation in the transport the sector. Okay, that's deemed our leader. Secondary leader, still sitting up above here. You can see here. Now, this is bullish price action. Don't get me wrong. This is bullish, but we need to start. We need to get going now. It's either this thing has to take out this horizontal sideways channel, either break down or break up. One way or the other, it needs to take out these two previous swing highs. Okay, and if that does not happen, I would look for a retracement back to the 50-day moving average as the bigger target. Okay, but we're patiently going to have to wait, sit and wait and see what happens, guys. And lastly is your Qs. You can see here. Okay, doing the same thing. Now, biotech is going to come out. So biotech's down about 14% year to date, where technology's been up, doing quite well. So it's not the technology holding back the Qs, it's the biotech sector. So we need to see participation from the biotechs in order to spark the Qs to move higher as well, keeping that theme of good earnings going into the technology sector. Okay, we'll see what happens with Facebook coming out, Tesla coming out. So there's a lot of big numbers coming out this week, along with FOMC. So be careful. I would reduce any holding of any positions, especially when you're coming into earnings. Make sure you check your earnings calendar for yourself. Okay, have a great day, guys. We'll see you tomorrow.